Okay, so as Washington determines if they're going to like Facebook, ETFs might be the way to play the social networking industry. Will Facebook get the thumbs up? Here to answer that question is Tom Lydon, ETFtrends.com publisher and Global Trends Investment President. Tom, thanks for joining us.
Nice to be here.
Well, so we know ETFs spread out the risk. That's the nature of this investment instrument. So work Facebook into this, considering all the finger pointing and uncertainty about what's going on with the stock from its debut and now going forward.
Sure.
Is this really a good way to lessen your risk if you want to get into something?
Yeah, well, first of all, the controversy aside, and it's terrible, but Facebook is not going away. You know, in the coming months, Facebook will be a part of major market indexes. And as you know, ETFs represent a lot of major market indexes, so those that own major ETFs will have a portion of Facebook. But there are a couple ETFs that are going to be adding Facebook pretty shortly. One is a IPO by First Trust that has their own IPO ETF.
And that's SOCL is the ticker.
No, and that is the social media ETF, which is SOCL, which that will actually include Facebook at the close of the market tonight. But the question is, it's going to be an 8 to 10% allocation. Is that going to make somebody rich? Is it the right investment for somebody? It's a small ETF. Both of these are small ETFs. I think as far as allocation into Facebook, you might want to keep that separate from an ETF
Yeah, I
allocation.
mean, do you even want exposure to Facebook right now? There's so many questions about the revenue stream going forward, about, you know, whether or not they're going to be able to make money on mobile media. Is it more of a concern if you see it taking up 10% of an ETF's allocation?
Well, that's it. I think most people are stepping back, and they should. They have a lot of questions. Does it mean that diving into an ETF that owns a large portion of Facebook is right for investors today? I'd say no. I'd say let the time go by, let the controversy fade, and then Facebook gradually will become a major part of indexes, as it should because of its market cap,
right.
And then investors can get back to investing for valuation.
Tom, do you think it's an interesting message, a bullish message on behalf of Facebook, that these ETFs are snapping up shares of Facebook so quickly?
Well, to a degree, it's a bit of a niche game, okay, with IPOs and with social media, right? The whole ETF market is booming. It's so popular. But those that are trying to compete are trying to come up with their special niches where they may be able to grab some dollars. In this case, both are very small, innovative, but for the average investor, I'd stay away at this point.
Real quick before you go, you also had a look at currencies through ETFs. What was your take on that?
Yeah, so I think as far as currencies, especially what's going on in Europe, you know, you want to stay away from the euro. The dollar, safe haven at this point, and another currency, the Japanese yen, is actually holding up very, very well compared to major markets, and it's something that not many people are talking about.
Yeah. All right. Tom Lydon, thanks so much for joining us.
Thank you.
Thank you. Nice to meet you.